In this video, we're gonna talk about 4 golden rules that you should always follow before trading crypto or stocks at any given time. Welcome back to the channel, guys. It's your boy Hima, and in this video, like I told you, we're gonna discuss 4 golden rules that I personally follow. And of course, these 4 golden rules are introduced and used by famous people like Warren Buffett, Ray Dalio, Peter Schiff, and etc. I want you to listen to these things and pay attention. Maybe get a notepad and write them down, because these 4 golden rules will help you a lot in your investing or trading journey. So without further ado, let's get to it. Number 1, never buy at the top. When everyone is talking about it, it's time for you to be fearful. Warren Buffett was the one who said it, be fearful when everyone is greedy. I'll give you a quick example. We are looking at Tesla right now. So when Tesla was reaching $900 mark, everyone was saying buy Tesla, it's the new future. Tesla will go to 3,000, 2,000, and it's still undervalued. So stocks or crypto that are in a bull market, they go through cycles. All right, once they have a certain level, they actually come down and have a breather. This happens because some people are taking profits out. People who specially got in to a stock or a crypto during its inception or at a really low level. All right, when that happens, the stock actually comes down crashing, and that's why you should never buy at the top. And Tesla is a great example, because people who bought in at $900 mark had to bear substantial losses. Number 2, never go all in. Have you ever heard of the term, don't put all of your eggs in one basket? Well, this is what that means. So what that means is diversification. You have to diversify your holdings. Don't go all in on one thing, maybe crypto or stocks or commodities. If you have $10,000, put $2,000 in stocks, put $2,000 in crypto, and keep $4,000 as an emergency fund, and the rest of the money, which is $2,000, you could buy gold and silver. So that's an example. You have to diversify, because we don't know what's going to happen in the future, and the markets are really volatile. So when you diversify your holdings, when you put your money in different places, if one sector goes down in your portfolio, you have other areas in your portfolio to protect your capital. Coming in at number 3, please have a stop loss. Please. A stop loss is basically like your insurance. You have insurance for your car, you have insurance for your house. Let's say there's a crypto or a stock at $5 and you want to buy this in. You did your research, everything is looking good, and we are about to take off to the moon. But there's always one thing that you should consider, and that is the X factor. X factor is things that you have no control over, and these things happen and you can't do anything about it. For example, a virus outbreak, a war breakout, or something else, a storm or a tsunami. Well, look what happened with the corona. The market actually crashed down. So people had no control over what's going to happen with these kind of things. So that's the X factor, and you have to always consider the X factor in your trading plan. And that's why it's vital to have a stop loss. So let's go back to our previous example. You have $10,000 and you want to enter a stock or a crypto at $5. All right, and you set a stop loss of 10%, meaning if something bad happens and the stock or the crypto goes down, you're gonna exit at a 10% loss. Meaning if the stock or the crypto comes to $4.50, you're gonna exit. That's your stop loss. Think of it as like this. Would you rather lose 80% of your capital, or 60% of your capital, or 10%? And that's why it's important to have stop loss. It's always about protecting your capital. All right, and that's why you should have stop loss. Most people say, oh, I don't need to have stop loss, I'm good, and I'm holding this for the long term, and they're losing most of their capital, and they're like, whoa, what did I just do? Don't be that person. Be smart and have stop loss. It's very easy. All the platforms whether it's stocks or crypto, they offer, most of these platforms offer options trading, so where you could actually put a stop loss to protect your capital. Number 4 and the last tip is do your due diligence. By due diligence, I mean mainly if you're trading in the short term, you need to look at the charts. Charts are very important. I will be making videos on how to read charts as well. That's it for today's video, guys. I hope you enjoyed. I hope you learned something. It's a short video. I'll be dropping more amazing content, so if you learned something, please hit the subscribe button. I'll see you guys in the next video. Until then, happy trading.